Hey everyone, welcome. We're going to spend the next 5 minutes breaking down the big idea from the weekly Slow Investment Synthesis newsletter, hot off the press for October 21st, 2025.
All right, let's jump right in. No fluff, no messing around. We're getting straight to the single most important takeaway from this week's analysis.
And boom, there it is, the bottom line, right up front. The whole idea this week is that while everyone is chasing the shiny new AI software, the real, patient opportunity is hiding in plain sight. It's in the companies that are literally building the foundation for this whole revolution.
So this gets to the core of it, right? What's the market's big blind spot? Well, the newsletter says it's this huge disconnect between the AI hype you see everywhere and, the nuts and bolts of how this stuff actually gets built.
I mean, you turn on the news and what do you hear about? AI models worth billions, the Mag 7 stocks, crypto going up and down. But the argument here is that the real story, the one nobody's talking about, is happening with these overlooked industrial suppliers, the super boring utility companies, the actual physical stuff that makes it all work.
And this brings us to this really powerful analogy, the real AI gold rush. You've probably heard this before, right? Back in the California gold rush, who got rich? It wasn't always the folks digging for gold. A lot of the time, it was the people selling the picks, the shovels, the blue jeans. This newsletter is saying the exact same thing is happening right now with AI.
And this is what the newsletter calls the infrastructure paradox. We're all excited about AI, but if you stop to ask, where are we going to get all the electricity for this? I mean, who is building these incredibly specialized data centers? And what about the cooling systems to stop them from melting?
So these are the modern-day picks and shovels. We're talking about power utilities, massive HVAC systems for cooling, all the network gear, and even the construction firms that specialize in building these things. These are the unsung heroes, the engines of the AI era, and they're just hiding in plain sight.
Okay, so that's the big picture. But how does this actually translate into investable ideas? Well, the newsletter breaks it down into three big opportunities.
First up, industrial automation. The logic here is super simple. You can't build these futuristic data centers with yesterday's tools. You need advanced robotics, you need precision manufacturing. And the companies that make this equipment, well, they're essential, but the market's kind of ignoring them because everyone's obsessed with software.
Idea number two is even more foundational, and I mean that in a good way. AI infrastructure and utilities. Yeah, I know, utilities sound so boring, but think about it. When you've got a technology that needs as much power as a small country, the companies selling that electricity and owning the land, suddenly they don't seem so boring anymore, do they? They become absolutely critical. And then the third idea is Bitcoin. Now, this might seem like a curveball, but it actually fits the slow theme perfectly. The focus here isn't on the crazy daily price swings. It's about looking at Bitcoin as a new kind of digital infrastructure. The big clue? All that institutional money pouring in through ETFs. That's patient, long-term capital, treating it like a foundational piece of the future.
Okay, so how do we actually put all this into practice? The newsletter gives us a few sample frameworks for building a slow portfolio, and it really depends on your own appetite for risk.
So for the conservative investor, it's all about that stable foundation. A big chunk, 40%, goes into those AI infra REITs and utilities. Then you've got a healthy 30% in cash and bonds for safety. The rest is split between manufacturing tech and a small slice of Bitcoin for a little bit of growth potential.
Now, if you're a bit more moderate, the portfolio shifts. The allocation to manufacturing and automation goes up, and we bring in some fintech and crypto infrastructure. It's still got that solid base of utilities, but we're dialing up the growth factor.
And for the aggressive investor, we're really leaning into that growth. Industrial tech and crypto infrastructure take the lead. But, and this is key, look at that. It's still anchored by a solid 20% in those AI utilities. So it's aggressive, yeah, but it's not reckless. It's slow aggressive.
And really, this all boils down to the core philosophy here. In a world that is just obsessed with moving fast, the newsletter argues that being slow, being patient, that's not a weakness, it's your superpower.
And to really hammer this point home, there's a great lesson from history. Think back to the dot-com boom. Everybody was chasing the hot new websites, and then what happened? The bubble burst. And when the dust settled, who was still standing? It was companies like Cisco, the ones who built the actual routers, the plumbing that made the internet work. The parallel to the AI boom today is, well, it's pretty hard to miss.
And this quote from the newsletter just wraps it all up perfectly.
It's about letting the momentum traders chase the headlines while you patiently accumulate these overlooked companies that just quietly compound your wealth over time. It's a totally different game.
So what can you do with this? What's the action plan? Well, it's pretty straightforward. Start looking into these boring infrastructure companies. Think about whether a small, long-term position in digital assets makes sense for you. And please, pay attention to the big signals, like institutional adoption, not the day-to-day price chaos. And above all, start thinking in years, not quarters.
And so that leaves us with this one big, provocative question to chew on. In this incredible age of AI, could it be that the most profitable move is actually the most boring one? Something to think about. Thanks so much for joining this explainer.